Hey guys, Michael Blanc here. I'm so glad and excited you're here to learn about apartment building investing. Today's topic is going to be raising money for your next apartment building deal. One of my favorite topics, and I really love this idea of raising money to get into apartment buildings. We talk about it a lot. Today I want to talk about specifically, hey, what are investors looking for? So we're now at the point where we've got a meeting with an investor and you're in this meeting and, what are they going to ask you? What are the top questions investors have? What are the main concerns? What can you do to prepare for that first meeting? So here they are. Let me start first by saying that the major thing on an investor's mind is not how much money they can make, but it's how much money they can lose. It's all about not losing any kind of money. So understand it when you go in there. I know you're very excited about making money for people, but that's not what they're thinking. So do not start talking about making money before you address the risk, the downside. They're going to want to know, they're going to ask questions like, why multifamily? You have to come up with something about why is multifamily a good thing versus, for example, the stock market. That's what most people are doing, or a CD or a bond or something like that. So you really want to research that. And there's really three short answers. You have to expand on that, but it's above average returns, right? Above average returns, extraordinary tax benefits, and in an incredible risk profile with regards to how it performed in the Great Recession. We all had a default rate of 0.4% in multifamily versus 4% in residential. So the default rate for multifamily, the risk, the way it performed in the recession was incredible. So why multifamily? Why you? That's the next one. Why you? You don't know anything. You haven't done anything. Why you? And that's when it's very important that you build your team around you. So you can talk about yourself not in terms of you, but in terms of your team. You have the best property manager in town, the best real estate attorney, the best lender, and you talk to them about that. You talk to them about the time spent in a certain market touring properties, and that shows to your investor how serious you are. Maybe you took one of our courses, The Ultimate Guide to Buying Apartment Buildings. You can check that out at themichaelblanc.com/products. And it's a fantastic online program. It's an online community and an actual live event all bundled kind of together to really help you kind of get started. So it doesn't matter. You maybe even have a coach. We have coaching programs as available. But here's the bottom line is, educate yourself. It doesn't have to be with me. There's plenty of other people out there. But really find someone you resonate with and go deep in there. You've done all that stuff. You're going to be very confident with an investor when they ask you, why multifamily? Once you got past that, you really want to talk about some of the risks. And if they don't ask you, you should probably say, hey, you know what, there's some risks though. I'm not, certain things I'm kind of concerned about. They'll go, really? If you're a passive investor, by the way, and you're talking to some investor and you ask what the risks are, they're on, it's a sure thing. You basically want to run from that kind of from that kind of syndicator. So mention some of the risks that are in a project in general and what you're doing about them. That shows to the investor that you've thought this thing through. Of all the things go wrong, and you're putting points in place. So that those all are addressed the risk factor. The fourth one, still related to risk factor, now transitioning into return, is, hey, what is the minimum investment and how long are you going to hold my money? So with regards to the minimum investment is, I like keeping the number of investors to 10. So if you're, let's say, raising $1 million, divide that by 10, so the minimum investment is $100,000. All right, so you can go down to $50,000. I would caution you to go below $50,000. You might think it's easier to raise $10,000 at a time. You would be dead wrong. It's the same amount of effort, and in fact, the people who can only invest $10,000, they're going to be your biggest pain in the butt investors, because it's probably the last $10,000 they have, and they are going to be clinging on to that like crazy. So trust me when I tell you, it might take you a little longer to raise $100,000 versus $25,000, because you might have to make one other hop to get to the other person, but it's totally worth it. So don't go that route. Don't raise money $10,000 at a time. That's a big mistake. So minimum investment, and the other one, how long you're going to hold it. Typically, investors want their money back in 5 years. So that's either an outright sale or a refinance. And when we do a refinance, we want to return back at least 60% of the original capital. Otherwise, it's not really a great refinance. And the most important thing is you got to do what you say you're going to do, right? So if you get someone on board and 5 years rolls around and you don't sell, that's going to aggravate the investors, right? So really want to honor what your plan was. So you're going to have to answer those kind of questions. And then the returns are going to shift into more, what are the returns, and what are the split? Is it a 70-30 split, 80-20 split? What are the returns? So that's in terms of what is my cash on cash return? In other words, if I invest $100,000 with you, how much of that each year is going to be distributed as cash flow. That's a cash on cash return. And then what's my overall return? And investors are thinking, how many years will it take to double my money, right? So 15% average annual return doubles your money in about 5 years. So for Class C property, that's kind of what we're seeing as well. But here's the thing about the returns. Really poll your investors, because your friends and family, for example, would be just tickle pink with a 10% return. So you don't have to go crush it with a 15% deal if they don't really require it. So really poll your investors. As you get more sophisticated, investors are looking for higher and higher returns. But when you're starting out, your friends and family investors might not really care quite as much. All right, so those are some of the things that you want to think about before you walk into an investor meeting. Questions you can have answered within 30, 60, 30, 40, 45 days. Educate yourself, get some confidence, answer these questions, and you're going to be really, really well positioned to reach out to your investors and really in a very short order raise money for your first multifamily deal. All right, guys, that's all I got. If you enjoyed it, give me some hearts, give me some loves, give me some thumbs up. That's awesome. I appreciate it. Love seeing those things. And let me know in the comments below if you have any questions as well. I'll watch those. And yeah, and also make sure you grab my free ebook. I forgot to mention that. It's at themichaelblank.com/ebook. That's the Michael Blank. It's THE Michael Blank BLANK.com/ebook. It's called The Secret to Raising Money to Buy Your First Apartment Building Deal. You're really going to open up your eyes to raising money. So hopefully you found this video useful. I will catch you next time. All right, I hope you enjoyed that. Now, as the next step, download this ebook right here, okay? When you've downloaded that, make sure you also subscribe to my YouTube channel, because then you can get all of the videos that I release as soon as I release. So make sure you subscribe to the YouTube channel right now. Click on that right now. And then also make sure that this is the next best video to watch, is this one right here. So hope you enjoyed that. I'll catch you next time.